Good morning, and thanks for joining us here on Treasure Coast Solutions every Wednesday morning. Rain or coronavirus, we're here to talk to you about things that are important in your life. And many of you know it's an economics type show where we talk about financial issues, not financial planning necessarily, but financial issues and their effect on you here in Stewart and in Martin County, and some of the things that you may need to be aware of. So we're trying to help you get through whatever economic crisis you may be facing in the best way possible. And that is the goal. It's a community service program. So we encourage you to call if you've got a question or comment. 220-9788, 220-WSTU is the number here in the studio. So we'll be happy to take your call. I did want to mention that my name is Mark Brechbill. For those that are new to the program, I'm a CPA. I also am a community association manager. I'm also an ex-banker and was a banker for some 13 years. Started banks at one point in my career. Was chief financial officer and chief operating officer of a community bank. I was chief financial officer of a $600 million regional bank at one point. So I've got some understanding of the banking world, as well as have had an opportunity to work in as a CPA in that industry as well. I started off my career with with Arthur Andersen out of Chicago in their banking division. So dealt a lot with finance and economics, and had an opportunity to see a few things, which was great. One of the things I've learned over the years, economically and financially, is you never want to be the trailblazer. I remember years and years ago in the 70s when they came out with with money market accounts. See, some of us have been around that long. Many people don't remember that in the day you had a savings account and the banks could only pay you a certain amount of interest no matter what was going on. And that was it. You brought your passbook in and you got it stamped. It was fantastic. And but then they went to money market accounts. And I remember there was a consultant that I had an opportunity to work with in the bank industry named Alex Sheshinoff, and he was out of Kansas City, and he was one of the experts in the field. But he used to have a big, what in those days were slide shows, now PowerPoint presentations, but he used to have a big slideshow that used to start out with, and it showed these guys in the Wild West out there in the front blazing a trail. And then I remember he always used to show, the next slide was his comment was that you don't always want to be out in front. And his next slide, there was arrows in the guy's back, so it was kind of funny at the time, probably not politically correct today. So, but anyway, at the time it was pretty funny in terms of some of the disadvantages of being out there. You kind of take some shots early on that maybe you could have avoided had you not been the trailblazer. But some days you're forced to be a trailblazer, and today that's kind of where we're at from a economic standpoint. We're entering new waters, and somebody's going to have to set the trail. And I'm sure when they do, they're going to take a few barbs. So, and I think that what I'm getting at, and it's not political, but I think that unfortunately, or fortunately, depending how you look at it, but I think unfortunately, in a non-political way, President Trump is going to take those barbs. And what I'm getting at here is that I want to talk a little bit about economics, but the economics of today in Washington and even worldwide are going to take a hit politically. There is no right political answer to what we're doing right now. There may be a right action that potentially can be taken, but that doesn't mean that that's a good political action. And so what I'm getting at here from an economic standpoint, we talked about it last week. I want to talk about flattening the curve, but this is an economic show and a financial show. So when I talk about flattening the curve, I'm talking about flattening the economic curve. which is exactly the opposite of what we want to do. Um, and it's important to understand that, because there's going to be a decision that's going to be made, and that decision is not going to be well received by some people. Probably some people are listening to this show right now. I know that there are people out there that believe that one death is too many deaths, and I understand that. And I think that's probably, I think we all in our heart would hope that, one death is too many. At the same time, we have to look at the outcome of our actions and what kind of deaths, and I'm talking about legitimate, not economic deaths, because those are going to occur too. Businesses are going to die, and not come back, and that's going to be an issue. But what kind of devastation is caused by that economic death in terms of actual physical problems and death, and loss of life, and loss of health, and all those kind of things. So when we look at this situation right now, we have to be cognizant of the fact that if we flatten the curve the way that they're flattening the curve from a medical standpoint, we are going to create many, many, many more deaths in the long run, um, than we have by the virus. But the problem is, how do you prove that? I mean, how do you legitimately prove something that didn't happen? And there's the political dilemma. And that's why I said there may be an economic answer that's correct to this, uh, and there may be a medical answer that's correct to this. In other words, we can find the point where those two intersect. And that's kind of the interesting thing. When you're, again, I'm not a great mathematician. I actually understood math theory pretty well, because you don't have to do anything. You just have to understand it. But the number stuff, getting in there, I figured they had computers for that, and I wasn't going to do it. So, but let me, but let's think about it from a mathematical standpoint. If you've got a situation where you have, we're talking about the three things we're talking about are on the curve, are the spiked and down. That's what we would call the immediate illness, and then recovery. And on the economic side, we're talking about that spike is the immediate crash of the economy, and then the immediate rebuilding of it within a relatively short period of time, 30 days or so. Okay. Okay. So if we look at that within that period of time, if we have a crash in the economy and then it recovers within 30 days, then most likely we are not going to have a great deal of businesses that go under and stay under. And it's, it probably is going to be a little bit higher here, and maybe a little bit higher here in Florida, and particularly South Florida, because we have so many seasonal businesses that miss the highest time of their season. Retail, maybe not. They had November and December, so they had that. But many of the other businesses, restaurants, hotels, and everything else, they make their money in January, February, March, and then pretty much April is a little bit, and then the money they made in January, February, March, they used to get them through May, June, July, August, September, and into October, when it starts maybe recovering a little bit. So here we could suffer a bigger economic loss just because of our location. Whereas, for example, North Carolina, they're probably going to come out. They would come out much better if the economy crashed right now during their off season, and then recovers by the summer for their for their high season, and the fall for their leaf season. Then they're going to actually probably not experience any real loss of business. The businesses that would go under were businesses that would have gone under anyway, because they just financially weren't capable. And in fact, the season in North Carolina, come August or September, could be packed because people could be, wanting to finally get out and do something in the outdoors. So so that's what we're talking about economically. That economically, if we have a sharp drop in the economy, and again, I'm not talking about the stock market, and that's one thing you guys need to, I think everybody needs to focus on. Stock market has no bearing on what's going on in the economy. Zero. It's a big crap game that people are just reacting to on any word. When the market reacts, when the president says something, when the market reacts, when words come out from Fauci or, he makes some comment, and all of a sudden there's no reason for that because that company that makes up that index, that's a bunch of companies, hasn't had any impact. It's people are just thinking it might. And so it's jumping on the thinking it might. There's no numbers that are showing that that's happening. And stock prices, frankly, are supposed to be based on projected earnings, multiples of projected earnings. The problem is stocks have been selling at way beyond the normal multiples of projected earnings. And that is only true really in the Wall Street world and with these SEC traded companies. Small business doesn't trade at those kind of multiples. First of all, they don't sell that often. You can't go to the local, you can't go to the local exchange and say, "Hey, I've got a CPA firm for sale today. Could you give me, give me money?" They don't. It takes a long time to sell a small business, and those businesses don't sell for 20 or 30 or 40 or 50 times a projected earnings number that is 40 or 50 times what their actual earnings are. I mean, it's just crazy what happens there. It's just, I take double zero, roll let the roulette wheel go is really what is happening to some degree. So ignore what's happening there. You need to make sure you're protected on that because most people have their retirement money invested in those things. And so they need to be aware that, that's going on, but they just need to leave it go and let it ride. It's just speculation. And until you sell, you haven't had a gain or a loss. So bottom line is, though, small business doesn't sell at those multiples. So you've got a situation where the small businesses in the world are the ones that are going to create the jobs. They're the ones that are going to, and they're the ones that we need to focus on in terms of what's going to happen. And so when we're looking at that, their recovery is going to be it's going to be important that they're back on in the short run because they won't have a long term. They don't have stockpiles of cash. They can't go to the market and raise funds, that kind of thing. So we're looking at their cash reserves. So getting back to my analysis, so we're talking about this one spike, and then we're talking about flattening the curve on the virus side. We talk about flattening the curve. And you'll see them flatten, and everybody says, let's flatten it further. Let's flatten it further. Let's flatten that curve. Well, that's great, except that while you're flattening that medical curve, to flatten that medical curve, you have to flatten the recovery curve. Now, here's the difference. There's two things you have to understand. When you're talking the economics or you're talking the virus, the area under the curve is exactly the same if it's spiked or if it's flattened. There are the same number of businesses, potentially, or people that are going to be impacted. So some people won't be impacted economically. There are some businesses that aren't potentially going to be impacted by it, or that may be impacted positively. Those are our people that are going to get a mild case of, and I'm using that as an example. Those are the people that are asymptomatic. Those are the businesses that are asymptomatic or that may not get it at all. And they're factored into both analysis. Now the thing is with the spiked curve on the economic side, there's potentially the same amount of businesses that are impacted. There are a certain number of businesses that are impacted, and it's just the severity of the impact that is going to make a difference. So, so when you look at the medical side of the flattened curve, the number of people under that curve is the same number of people as are on the is on the financial curve. I mean the spiked curve for the virus. They're the same number of people. From a geometry standpoint, the area under the curve in both scenarios, whether it's flattened or spiked, are the same number of people. It's the same number of people that are expected to get it. So when you hear people saying, "Well, we're going to flatten the curve," people mentally think that means then I'm not going to get it. No, it means then I'm not going to get it that soon. Okay. The goal on both of these things, on the medical side, is to avoid is to keep the number of people who get it below the possible hospital care. Well, first of all, that's not everybody who could get it. So if the population in the first spiked example is everybody who's projected to get the virus, then the number in the flattened curve is everyone that's projected to get the virus, right? But what they're shooting for is to keep those people who need hospital care under the level of the hospital care that's available. Well, if that's the case, then that means that the flattened curve, some portion of that flattened curve can be above hospital care without death. And can be above there. So what it means is that the flattened curve is already flattened too low from a medical standpoint, because it's keeping every possible person. It's assuming that every possible person that gets the virus would need medical care. That's what it's trying to do. It's assuming you all would need medical care of some extended care, like hospital care, not just, medicine, but hospital care. Well, that's already flattening the curve more than it needs to be. Now, the question is, how do you determine who those people are? Good question. But the point is, medically, we're already flattening the curve below the level it needs to be. Why? Because the medical scientists are trying to be overly cautious. All they're worried about is science. All they care about is that people don't die. And the only way they can think to do that is to make sure that anybody who gets it could go into the hospital and get a ventilator and whatever. Well, realistically, that's not going to be the case. I mean, we know that, some number, and it's been thrown out, 80, 85% of the people that actually get this are asymptomatic. They don't even know they have it. Now they're carriers, but they don't even know they had it. They may have already had it and, have developed some kind of antibody. But the point is that it's unrealistic to flatten the curve below so that everybody that gets it could go into the hospital. Now, that would be realistic if that is all we were worried about. But to accomplish that, we have to keep people inside, which means we have to shut down business. At that point, shutting down business to be overly cautious is going to result in many, 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 many more deaths than the virus, because we'll have excess capacity. I mean, and think about it. I like to look at mathematics and things from a financial standpoint and say, does it make sense in the real world? I mean, is it just theory? Does it make sense? Well, let me ask you this. Why is it that New York right now looks like they're starting to come down, or at least starting to level off potentially? They had what we would consider a spike. The nice term is hotspot, I guess, but we would consider that to be more of a spiked reaction, right? And so that number is starting to come down at this point. Well, now there's reports coming out that there's actually excess capacity in New York. They thought they were going to need way more ventilators, way more hospital beds than they actually have needed. Well, that makes sense. Why? Because they were trying to flatten the curve to the point that the expectation was that almost everybody that needed care that got sick would need care. Well, that's not true. If 85% of the people that are going to get sick aren't going to need care, then we're not going to tax the hospital system. We're not going to tax the medical system. And also, we haven't allowed for innovations. We haven't allowed for other things. But even if we didn't, the fact is the curve was flattened too low to start with, because it was flattening the curve to avoid every possible person to avoid the situation that anybody could go without hospital care. Let's face it, we know that a certain number of people that get it will not need hospital care. So already we're flattening the curve too far. So you say, well, that's going to save a lot. What if it just saves one life? Well, if it just saves one life, and I'm okay with that, if it saves one life, but it kills 7, then are we okay with that? Is that really what we should be doing? And that's what we're really talking about. And why are we talking about that? Why am I saying that? Economically, if this economic shutdown goes beyond now almost, but April 30th for sure, and I think April 15th was probably the better number. If we go beyond April 30th, then there are a number of businesses that will not spike back up again. They will permanently be gone. So I guess what I'm saying is economically flattening the curve creates an economic death toll that is much higher than the risk of death on the virus side. And that's just the way it is. So technically, what you need to do is determine the intersection point at which people will actually need hospital care, and the point where businesses can't go on any longer. A certain percentage of the businesses will die. And where you avoid economic death, or a large amount of economic death, and you then also avoid a significant amount, not all, but a significant amount of actual medical need and then potentially death, then at that point, that's kind of where you need to be. Now, think about that a second, though. That isn't going to make anybody happy. That's a point where businesses are still going to go out of business, just not as many. And people are still going to die, just not as few. It's going to be a few more deaths and a few more businesses that are going to go out of business. Now, and so politically, that's not a good, there's no right answer to that. And that's the difficulty here. Here's the thing. Let's look at politics, because politics ultimately are going to have an effect on the end game in this situation, because that's going to determine, ultimately what happens after all of this. What are the chances that anybody is going to get reelected when they've either killed business or killed people or both? Keep in mind that to the extent that you save businesses and thus avoid a depression, which then avoids a number of deaths. And why do I say death? That sounds like all I care about is business. And that's what's going to be, that's what whoever makes this decision, i.e. the president, they're going to be the ones that are going to take the blame for this. But, the problem is they have to be concerned about the deaths that will occur as a result of an economic catastrophe. And so right now, I would say this week, we're going to have, let's put it this way. 2 weeks ago, we had about 3.5 million people that went on unemployment. All right. That was kind of the start of the unemployment situation. That was 2 weeks ago. We're 2.5 now. Last week, 6.6 million people went on unemployment. We have 10 million people that went on in unemployment in 2 weeks. Now, let's put that in perspective. When we were looking at the Great Recession and the recovery from the Great Recession, we were adding about 100,000 jobs a week, and that was considered fantastic. We were in recovery. When the president was at the high of his economic expansion after his election, with the stimulus that had been pushed in there, we were looking at about 250,000 jobs a week. We're talking about losing 6 million jobs in a week. So basically at maximum that we were ever at, we're talking about 30 weeks, to get ourselves back to even any kind of reasonable number for that period of time, for that loss for that period of time. But that loss of jobs is going to be double that number, because frankly, this week my guesstimate is that we're going to see 10 million lost jobs this week. And the reason I say that is that last week there were way more than 6.6 million, but nobody could get in to report their unemployment. The system couldn't handle that many calls. The system couldn't handle the volume. It was crashing, and so people didn't get to report. And there are people probably still today, yesterday, Monday, that were trying to report, and they're for last week, and they're on with the people that are trying to report for this week. The number this week is going to be huge, because people are going to be starting all week long. Last week and the week before, you had spillover from people that got let go on a Friday and said, we don't have pay for you. So starting Monday, don't come in, you're unemployed. That's basically where it's at. So now let's say we had 10 million from those 2 weeks, and let's say we have another 10 million. We got 20 million people unemployed. That can't even fathom 20 million people. On a percentage basis, that's way bigger than the Great Depression, than 29. So we're talking about the Greater Depression, the greatest, maybe, hopefully, but the Greater Depression. Now, so you want to see what happens with something like that? Well, let's go back to 1929. Keep in mind that what's happening right now, and you watch the statistics, charitable giving is down. When people don't have money for their own needs, or what they perceive as their own needs, charitable giving goes down. I and everybody else I know wants to be charitable. If we don't have money, we can't borrow money, we can't be charitable. We don't have any money to give. And I'm telling you, a lot of people who do give, they're not giving right now. Even if they have the money, they're not giving right now. Many of them would give from their investments. Their investments are, we're down 30, 40%. They're not going to give from that. Many people were looking at having to they use some stocks and transferred over to get a credit for their required minimum distribution on their IRA. Well, they don't have to make that this year. So, and they're not going to do that with stock market down. So a lot of that is stopping. A lot of the charities that have invested money, that money is down. So they're not going to pull money out right now and take huge losses from their charitable funds. Because they don't want to, they need that money for other purposes. So we're going to see charitable giving go down. That means that people who need support are going to not be able to get it. Let's think about churches. We're not having churches right now. We're having virtual churches. Have you seen, how successful are those virtual churches being at passing the virtual plate? It ain't happening. Nobody's giving their credit card. You probably can. I'm sure some of the churches are smart enough to figure that out. You can go on PayPal and make your contribution. But let's face it, there is some peer pressure that comes into play at church. Nobody wants to sit there and get the plate passed to them and then not put money in. It's embarrassing, right? So you throw in a buck, you throw in a couple bucks, $5, right? Because, your neighbor's going to see that you're a chintzy son of a gun. And why are you at church if you can't give? So but now you're at home by yourself. Nobody can see your credit card. They're not going to know, they're not going to know if you fulfilled your pledge or not. They're not going to be able to see that. Your neighbor doesn't see you putting the card in, putting the number in the computer. So how much of that's down now? And where is the first line of defense for the homeless, for those that need it, for the disabled? It is the churches. It is the churches that are usually the ones that are there to take care of the family in need in the short run. And in fact, for many, many small business owners, when they have problems, their church is where they go to get bailed out for a period of time. Church won't have the money right now. It's furloughing people. It's just not going to happen. All right. So what happens in the Great Depression? We had soup lines. Why? Because nobody had food. It wasn't a question of, I mean, I love Mark Cuban's comment the other day. The owner of the whatever the basketball team is down in Dallas. His comment was, don't go to Publix. Don't go to the grocery store. He didn't say Publix. Don't go to the grocery store. Don't buy anything at the grocery store. Go order online from your favorite restaurant. Order online, order extra, tip big, and keep those people employed. That's great words from a billionaire. Now, I'm out helping to purchase food for friends and family, and I'm trying to find the cheapest food I can find to get me through, right? So I'm not. I used to be able to, but I'm not going out to those restaurants. I can't afford to. I've got to feed my family. I've got to feed myself and make sure I can afford it. I can't afford that now because I don't have that money coming in anymore. So, Mark, that's great, but you're a billionaire. I don't care what you say. I'm talking about mom and pop and their kids that are trying to just get by. And frankly, it's hard enough for them right now because when they go to the store to buy bread or to buy, toilet paper or to buy whatever they're buying, they no longer can price shop. They no longer can buy the cheapest bread, the cheapest toilet paper. They buy whatever they can get. That's got to be costing them 15 to 20% more. So not only have they lost their income, but their costs have gone up by 15 to 20% because food costs are a major item for a family. So now, what do? When that money runs out, how do they eat? Do they go to the church? Well, the church is closed. They can go on virtually, I guess, but that's not going to help them. Get virtual soup, but that's not going to help. So what is going to happen? People are going to die. Economic disasters like depressions cause death. And we don't like to talk about that because we think it's just financial. You're just that way because, and I'm being very sarcastic, you're just that way because all you care about is money. All you care about is the bottom line. You just care about money. You don't care about life. No, I care about death that's caused by economic devastation. And there is as much death that's caused by economic devastation as there is death that's caused by wars. When people can't survive, when they're elderly and they can't afford their medicine, they die. When they're elderly and they're sick and they're in pain and they can't get help, they die. They kill themselves. They don't go for care. They die. When people can't eat and are homeless on the street, they die. When people can't make it through, they take drugs and they die. They drink alcohol and they die. They have mental illness and they die. Those are all deaths that are caused by economic devastation. Have you seen any discussion of that? Have you seen those up on the, have you seen people talking about those deaths? Has Fauci been up there talking about how many people he's going to kill if he flattens this curve down as far as he wants to flatten it? Has he given you those numbers? No, he doesn't have a model for that, but there is a model for that. And you can get that model and you can put it together. Go back and look at all of the previous depressions and the amount of deaths that occurred. And those deaths are directly result of those depressions. You can figure that out because you can see how many people died during that period of time, during that number of years, versus how many people would normally have died. And you can extrapolate that. And that'll give you a number going forward that's going to be an amount of the amount of actual deaths that we're going to see as a result of this economic devastation if this thing goes till July or August or September. Because if the economic curve flattens out to anywhere close to the end of the year, businesses will permanently be gone, jobs will permanently be gone, and people will be permanently devastated. Out of work, no hope, no food, no way to take care of their families. Now, what also happens in this? Well, let's talk about healthcare. If I'm really concerned about lives and healthcare, then shouldn't I also be concerned about what's going to happen to the long-term health of people who have no money for medical care? There's no medical care being provided because, frankly, we don't have any money to buy it. You could say, well, the government's going to provide it. People The government doesn't make money. Money for the government comes from only one place, your tax dollars. The other alternative is to borrow it, which has to be paid back with your tax dollars. There are no tax dollars. You're not making any money anymore. The billionaires have left a long time ago. They've sought refuge in some place outside of the U.S. because they can afford to do that, where they can buy an island and they don't have to worry about anything because they have the money to do that. And they'll order takeout, I guess, according to Mark Cuban, and have it delivered to that island. But the bottom line is they'll be gone. They're not paying taxes. They're not making any money probably because they're just living off the money they've already made. By the way, you don't pay taxes if you're living off the money you already made. So when we talk about what's going to happen, we can say, well, the government's going to step in. How? It isn't. Look what happened after the Great Depression. Why do you think we had Franklin Delano Roosevelt? Because he came in and said the government will give you everything. It will give you, and we expanded the social system so rapidly during that period of time. And we said we needed to do that. Well, but the problem is it became permanent and we created a huge amount of debt as a result of it. And it still did, and it still didn't get us through. And that social service was far less than what we're talking about today. Far less. I mean, really, when you look at it, Roosevelt didn't make people be comfortable. It wasn't like, you were well off. It just kept people from starving and from and from having to I guess be homeless, although many were homeless. So he created a lot of work programs that he could pay. Now that was pretty smart. I mean, that was really pretty smart because even back then, what he did is at least he borrowed money to pay people to at least build things that had long-term value. It went into infrastructure. That was at least smart. But the bottom line though is that, so right now we're talking about a crash where most of the money that was spent is probably not going to get to people. I'm not too worried. I've been working now night and day, really, 7 days a week, working on nothing but applications for my clients and others on these two loan products that are out there. There's basically two loan products out there. And you hear on the news on the second one, the one that just was, basically supposedly came available April 3rd, that it's out of money already. And it is from an allocation standpoint. From an actual give me the money type thing, there's no money out there. I mean, very few people have been funded. The reason is that the big banks have hoarded all of the applications. They were given an allotment. They've hoarded it. They're not making the loans yet. They're still checking things out. Frankly, nobody knows how to calculate how much money they're supposed to be given yet. And the banks are all concerned about that because if they give out the wrong amount, they're worried the SBA not only won't forgive it, but they won't guarantee the loan and they'll get it back and they'll have an unsecured loan with no collateral to a business that no longer exists potentially. So there's a big mess out there. Congress needs to approve that $250 billion because the small business, which is there's 30 million supposedly small businesses. A couple million have applied so far. But those aren't really small businesses. They're smaller businesses. They're not Wall Street businesses, probably. They're smaller business, smaller employers. But those are the ones that are probably the bigger companies like that. They're probably 500, a little less than 500 employees. They're going for the big bucks. And they're getting out there early. They had CFOs, chief financial officers, and other people helping them with this stuff. And bingo, they're going to get filed right away. And they got in, and they're the ones dealing with the big banks, the Bank of America, the Chase, the Wells. And so what happened is, as usually happens, all of the government money has been siphoned off first to Wall Street, then to Wall Street Light, I'll call it. Those businesses that are really, really huge, but not publicly traded. And so what's left? So what's left is the mom and pop, the sole proprietors. Well, they can't apply until the 10th. So they haven't even been able to apply yet. And how many of them are not even going to bother because they've already heard they're out of money? Well, First of all, that is not true. And it'd be interesting. I've been dealing with a lot of people. I'm on listservs where CPAs are dealing with a lot of people. I can't find anybody that's been funded yet. I have found people that have been told they have the loan, but have not been funded. So, so what's happening out there right now, people, is it's important to understand the difference between somebody taking an application, somebody approving the app. Well, first, there's a difference between somebody taking a reservation for an application, which is what some banks are doing, versus somebody taking an application versus somebody approving an application versus somebody funding an application. That is a 4-step process, or a 3 or 4-step process. That is what's happening. The last step in that process isn't happening very rapidly, if at all. The numbers I'm hearing, $5 billion, I have a hard time believing that money is actually out there. If it is, I can tell you where it's coming from. It's basically coming from it's basically coming from the very small banks, not the community banks that are regional banks. I'm talking about the sole branch, the 2 offices, the small operations. Those are the ones that potentially are the ones that are making these, because they're more equipped to get the money out quickly. But the rest of it, there's a bunch of money tied up right now, and it's tied up in things that the loans will never be made. So people are being turned away right now for help when they should be helped the most, because the big banks are hoarding. So again, tell me why we saved those big banks. Oh, geez, I don't know. That was a mistake, right? If we learn anything from 2008 and now is, after this is all over with, remove the charters of those banks. If they're too big to fail, let's fail them now. Get rid of them. They are worthless. They do not help the economy. They don't care about the U.S., and they're just strangling small business. Get rid of them. We don't need them. They're not too big to fail. Pull their charter. That the government can do. Oh, here's better yet. Don't pull their charter. Take away their FDIC insurance. See if they can get deposits if you don't insure their deposits. I'm not putting money in any of those banks if they don't have security, because they're not too big to fail if they don't have FDIC insurance. So let's just pull their insurance. Say, okay, you didn't participate. We're not going to participate going forward. You don't get any FDIC insurance. I guarantee you they'll be out of business pretty quickly. So you probably imagine I'm a little irritated at these big banks and the way they're treating small business right now, but that's the way they've done it forever. And like I said, we never recovered from 2008 because the financial system was still broken, and the financial system is causing this depression. The money that was out there, if it had been out there 2 weeks ago, like it was supposed to be, part of that is the federal government, part of that is the SBA. And the SBA is part of the broken system because they're the only ones making business loans right now, or guaranteeing business loans right now. So the financial system was broken, and this has just accelerated the depth of how bad it was broken. So we're seeing that we're seeing the effect of preserving these banks in 2008 and leaving weak performers in a position of strength to dictate what happens. And that's what's going on right now. But the bottom line is we're not getting any money out there, and they've got to get money out. On the SBA side, the EIDL, the Economic Impact Disaster Loan, that's the one where you're supposed to get $10,000 right away, and then you get more money as soon as they've gone through some process. Nobody has gotten any of that money that I know of. Some people, I heard somebody got $10,000, which, by the way, now I understand it's going to be $15,000. Just so you know, that understand now that number is going to go from 10 to 15, and but beyond that, I've heard of a couple of people that got funded under that. I mean, that got approved under that loan. I haven't heard anybody that got funded under that loan. So, if you happen to get funded, let me know, because I would like to know, how many businesses out there have been funded versus the number that have applied. I know how many have applied. There's been a couple million people that have applied for the EIDL, Economic Impact Disaster Loan. And, we understand there's been about a couple million people that have applied for the PPP loan, the Payroll Protection Plan. But I'm having a hard time finding anybody that's said, yeah, I've got my money. But anyway, the EIDL, supposedly that's going to be 15,000. But otherwise, the SBA is in lockdown. The people in the disaster area can't relate to the people in the regular, if you want to call it the regular SBA lending. They don't understand what the difference is between the two, but they've kind of been forced to meld their programs. There's bureaucracy that's bogged down. People are worried about minutia, and that's keeping money from being funded. My understanding is that on the EIDL side, which is the one that's directly from the SBA, that President Trump has pulled that away from the SBA and given it to Rocket Mortgage. And so supposedly there's supposed to be 5,000 applications filed a day with Rocket Mortgage, and they're supposed to be able to fund pretty quickly. But that hasn't happened yet, and all of that is tied up in some kind of technology snafu where they're trying to transfer from one system to another, and money is just, money is just stuck, is what it boils down to. We've got constipation of the financial system. That's what we got. So, that's where we are on that side. But right now, I think what you're going to see, people scare you on the medical side. They're going to tell you how many cases we're going to see this week. And this is going to be a rough week. I guarantee you, when people look back, they're going to realize that this was a much, much worse week financially than it was medically. And I'm going to scare the heck out of you, but I'm going to tell you that by the end of this week, we're going to have somewhere in the range of 45 million people unemployed in the United States. 45 million people. That will be a devastating thing. That's a huge, huge number. So I'm just saying that's the number we should be worried about. And we need to look at that where that meets. Here's the problem, is what I said before. I feel sorry for President Trump because I think he's done whatever any politician could have done. And I think he's done way better than that. I think he's done, because he's a financial guy, I think he's done a great job of trying to keep up everybody's, he's been positive, trying to keep up everybody's outlook on both sides of this thing, try to, get people to understand we're going to get through it. But he's going to be faced with a decision that if he's a politician, he won't make. And if he's a true leader, he will make. And the reason I say that is if he's a politician, he won't make it because it would result in him losing his not being reelected. If he makes it as a leader, he will be giving up the ability to get reelected because he'll tick people off right before the election. He will give up the ability to get reelected in exchange for saving the country. And I'll give him credit for that. And if he actually does that, I think he'll go down as really the greatest president of all time. I'm just not sure anybody that I know that's ever been president can make that decision. I don't think we've had anybody up to this point. I think some people have made decisions foolishly, not knowing what they were doing, but to really know, and I think he knows that he's going to have to send people back to work April 30th, and that's going to result in deaths. So anyway, that's where I think we are. I think we're moving on there, but that's why I hope you think about what I'm saying today. You don't have to agree with me; just think about it. And we'll be back again next Wednesday, and you will be too. By the way, all of you will be, one way or another. You'll be here next Wednesday, right here between 9 and 10 o'clock on Digital 1450. We are Martin County's Heritage Station, Stewart, Indiantown, and Jensen Beach.